Welcome to the Explainer. Today, we're putting Rocket Lab, ticker symbol RKLB, under the microscope. We're stripping away all the retail hype and running a pure, data-driven diagnostic on what this stock is actually doing right now.
Make no mistake, RKLB has completely exited the realm of organic growth. What we're looking at here is a pure momentum experiment, and the rules of the game have completely changed.
Here is our diagnostic protocol for today. We're going to cover the momentum anomaly, map out the technical divergence, define the structural floor and risk, weigh the fundamental variables, and finally, outline a precise accumulation protocol.
Phase 1 Momentum Anomaly Detected. Let's dive in and look at exactly what is driving this vertical parabolic surge.
At $124.77, a massive injection of capital triggered an extreme bullish extension. This rapid liquidity event has literally detached the stock from its historically justified fundamental mean.
Just look at the volume-weighted moving average, or VWMA, sitting at $101.04. That number tells us the average price based on actual trading volume. Sure, it confirms aggressive buying is driving the rally, but it also exposes a really dangerous gap. The current price is floating completely unanchored above its volume base.
Moving into Phase 2, Technical Divergence. We're now mapping the exact boundaries of the danger zone using strict technical indicators.
The 10-day exponential moving average, that's our immediate short-term support line, sits right at $109.94. The fact that the current price is just accelerating away from this short-term baseline tells us this rally might be structurally unsustainable in its current form.
Now, if we bypass the short-term noise to find the true medium-term structural average, we find the 50-day simple moving average firmly anchored way down at $79.25.
And this perfectly illustrates the severity of the divergence. The asset is trading 57% above that 50-day moving average. Think of it like a rubber band stretched to its absolute breaking point. The mathematical probability of it violently snapping back toward the mean is dangerously high.
And then you have the upper Bollinger Band, which is essentially the mathematical ceiling of standard price action sitting at $131.32. Aggressively approaching the ceiling is a classic definitive signal of climax buying pressure.
Phase 3, Structural Floor and Risk. Let's drill down into fail-safe supports and expanding volatility metrics. Beneath all the speculative noise lies the true structural floor, the 200-day simple moving average at $64.94. If things go south, this is the blood-red line of absolute institutional support. The Relative Strength Index, or RSI, measures the speed and change of price movements. Right now, it's flashing at 70.82, meaning RKLB has officially crossed into critical overbought territory. Now, super trends can ignore this temporarily, but a correction, it's highly probable.
The MACD momentum indicator registers at 12.84 and it's rising fast. This confirms that, the bulls are in control, but the upward momentum is structurally exhausted. There's no bearish divergence just yet, but the engine is running way past the red line.
Here is where the risk becomes extremely tangible. The average true range, which tracks daily price swings, has spiked to $8.89. Volatility is expanding violently, and that drastically increases the mathematical odds of a blow-off top, followed by a massive sharp liquidation sell-off.
Phase 4 Fundamental Input Variables. Let's strip away the retail hype and look at the actual company catalysts driving this.
First up, the rumored June 12th SpaceX IPO. We really have to weigh two competing outcomes here. Probability A, it's a sector validator. The IPO institutionalizes the space economy, lifting RKLB as the premier public alternative. But then there's probability B, a liquidity vacuum. Capital mercilessly drains out of RKLB and flows directly into SpaceX. Both are equally viable risks to your portfolio.
Internally, though, the upgrades are very real. They have a confirmed $2.2 billion Q1 operational backlog. Their $40 million acquisition of Motiv Space Systems buys them immediate lunar infrastructure capabilities. And those HAST and Golden Dome contracts? They mark a massive pivot from a simple launch provider to a designated defense prime, all funded by a massive $828 million cash reserve.
As Chief Financial Officer Adam Spice recently put it, they are separating true operators from space labels. Amidst an industry that's frankly full of speculative noise and companies with zero actual flight heritage, RKLB stands alone as the verified secondary operator.
Phase 5, the accumulation protocol. Let's strip away the human emotion, the fear, the greed, and outline the optimal strategy.
Target entry 1 is exactly $110. This is the aggressive retest zone, pinned right to that 10-day moving average. If you're eager to add to your position, this is where you execute upon the first sign of short-term weakness.
Target entry 2 is the zone between $80 and $90. This is your conservative mean reversion safety net. It perfectly aligns with the 50-day moving average and fills that volume gap we discussed earlier.
So, what's the bottom line for your portfolio? Well, if you currently hold a position, keep it, but absolutely deploy a strict 15 to 20% trailing stop loss to protect your gains. Avoid buying right now. Chasing this parabolic pump is just statistically flawed. The optimal play here is a dollar-cost averaging strategy over the next 4 to 8 weeks, which completely neutralizes the imminent volatility of that SpaceX IPO.
The data is clear, the technicals are stretched to the limit, and the fundamentals are shifting. The ultimate question you have to ask yourself before buying is this: when that SpaceX liquidity vacuum finally opens up, will Rocket Lab's financial architecture hold firm, or will the momentum violently collapse? Thanks for tuning in to this explainer, and trade carefully out there.